For over a decade, cryptocurrencies like Bitcoin have promised a new world of finance. A world that is open, borderless, not controlled by any single company or government. This idea is powerful. It suggests that anyone anywhere should be able to send and receive value without needing a traditional bank account. Yet, despite this grand vision, a huge gap remains. Most of us still live in a world where our financial lives are managed by banks. Our salaries are paid in dollars, euros, yen. Our mortgages, car loans are approved by banking institutions. The world of crypto and traditional banking feel like two separate universes unable to connect. This disconnect creates big challenges. Imagine you have some cryptocurrency and need to pay your rent. You can't just send Bitcoin to your landlord's bank account. You first have to go through a complex process. Selling your crypto on an exchange, converting it to traditional money, and then transferring that money to your bank. This process can be slow. A new approach to digital money, Pi Network, was born from a simple but powerful idea. What if anyone with a smartphone could get into cryptocurrency? Smartphone with Pi logo, connected graphic. Before Pi, getting started with crypto often meant having powerful computers for mining or navigating complex exchanges to buy coins. This created a high barrier to entry, leaving most of the world's population on the sidelines. The creators of Pi Network, a team of Stanford graduates, wanted to change this. They designed a system where users can mine Pi coins directly from their mobile phones without draining their battery or using up their data. This is done through a simple daily check-in on the Pi app, a process that secures the network and distributes new coins. The goal of Pi Network is not just to create another digital currency. It aims to build the world's most inclusive peer-to-peer marketplace. Smartphone with Pi logo connected to icons for goods, services, other people. By distributing its currency to a massive global community of users, Pi is creating a large-scale network from the ground up. The project is currently in a phase called the enclosed mainnet. This means Pi coins can be used within the Pi ecosystem, buying goods, buying services from other users, but they cannot yet be traded on external exchanges. Banks operate in a world built on regulations, identity verification, concrete data. When you ask for a loan, the bank checks your credit score from a trusted agency like Experian, Equifax. When you make an international transfer, banks use the SWIFT system, which confirms every detail of the transaction. These systems are centralized, meaning there are specific trusted authorities that provide the information. Blockchains and cryptocurrencies, however, are decentralized. There is no single company in charge of Bitcoin. Transactions are verified by a distributed network of computers. This fundamental difference in structure is the main reason banks and crypto don't naturally speak the same language. Imagine a smart contract, a self-executing agreement on a blockchain. Let's say this smart contract is designed to pay out an insurance claim if a flight is delayed. The contract needs to know if the flight was actually delayed, but how can it know? The blockchain itself has no access to flight data from airport websites or airline APIs. It's a closed system. It cannot look outside into the real world to get this information on its own. Chainlink was created to solve the Oracle problem. It is not a cryptocurrency in the same way as Bitcoin or Pi. Instead, it is a decentralized Oracle network. Think of it as a secure and reliable messenger service that connects blockchains to the outside world. Its job is to fetch, verify, and deliver real-world data to smart contracts in a way that is tamper-proof and highly reliable. It acts as a universal translator, allowing the isolated world of the blockchain to safely communicate with all the off-chain data and systems that power our global economy. Financial market prices, weather data, sports results, shipping information. Here's how it works in a simple way. Instead of relying on one source for information, Chainlink uses a network of independent computers called nodes. When a smart contract needs a piece of data, for example, the current price of gold, it sends a request to the Chainlink network. Multiple Chainlink nodes then go out and fetch that price from many different high-quality sources. Each node reports back the price it found. The network aggregates all these answers, filters out any that are wildly different, and arrives at a single, highly accurate and validated piece of data. This answer is then delivered back to the smart contract. This decentralized approach is what makes Chainlink so powerful and trustworthy. By using multiple data sources and multiple nodes, now we can see how the two pieces of this puzzle fit together. Pi Network has built a massive global user base, creating a potential digital economy with tens of millions of participants. However, it exists within an enclosed system. Chainlink has built a secure Oracle bridge to connect blockchains with real-world data and traditional financial systems. By itself, Chainlink is just infrastructure. It needs networks with real users and real assets to provide its services to. The potential synergy is clear. Chainlink could provide Pi Network with the secure gateway it needs to connect its vast ecosystem to the global economy. The first step in this integration would be for Pi Network to become an open, decentralized blockchain that can support smart contracts. Once the Pi mainnet is fully open, developers could build applications on top of it. This is where Chainlink would come in. By integrating Chainlink's Oracle services, Pi's smart contracts could access reliable real-world data. For example, a marketplace built on Pi could use Chainlink price feeds to allow users to price their goods and services in their local currency, with the conversion to Pi happening automatically at the most current tamper-proof exchange rate. This connection would be a two-way street. Not only could Chainlink bring external data into the Pi ecosystem, but it could also help broadcast information about the Pi network to the outside world. For banks and other financial institutions to interact with Pi, they need a trustworthy source for its price. Let's walk through a real-world example. To make this concrete, imagine you're a Pi user. With a significant number of Pi coins, you need a $500 loan to repair your car. But you don't want to sell your Pi because you expect its value to rise. With Pi Network and Chainlink integrated, you could use Pi as collateral to get that loan from a DeFi app or a forward-thinking bank. The process is automated, transparent, and accessible on a smartphone. Here's how it works, step by step. Flowchart overview. Step 1. Deposit Pi coins into a smart contract. Step 2. Chainlink provides PIUSD price to the contract. Step 3. Smart contract verifies collateral value and releases $500 in stablecoins. Step 4. User repays loan and smart contract returns, Pi coins. Open a DeFi app on Pi Network, request a $500 loan, lock up Pi as collateral. Example, deposit $1,000 worth of Pi to secure a $500 loan. How does the app know Pi $1,000? Chainlink steps in. Smart contract uses a Chainlink price feed to get a secure, real-time PIUSD rate. This keeps valuation fair and tamper-resistant. Once enough collateral is confirmed. The safety of any financial system, whether traditional or decentralized, depends on the quality of its information. Bad data leads to bad decisions, which can result in catastrophic losses. In the world of crypto, where billions of dollars are managed by automated smart contracts, the need for secure, reliable data is even more critical. This is the fundamental safety proposition of a decentralized Oracle network like Chainlink. It is designed to be a fortress of data integrity, protecting smart contract applications from manipulation, inaccuracies, and downtime. One of the biggest security risks in DeFi has been attacks on price oracles. In the past, many projects relied on simple or centralized oracles to get their price data. Hackers realized they could manipulate the price feed on a single exchange that the oracle was using and trick a lending protocol. For example, they could artificially inflate the price of a worthless token, use it as collateral to borrow millions of dollars in valuable assets, and then disappear, leaving the protocol with worthless collateral. These Oracle exploits have resulted in hundreds of millions of dollars in losses across the crypto industry. The combination of an accessible crypto network like Pi and a secure data bridge like Chainlink is not just a technical curiosity, it promises to deliver tangible real-world benefits for ordinary people around the globe. The most significant benefit is the potential for greater financial inclusion. Billions of people worldwide are unbanked or underbanked, meaning they lack access to basic financial services like savings accounts, credit, insurance. For many, the barriers are high fees, lack of required documentation, the sheer distance to the nearest bank branch. A mobile-first crypto network removes many of these barriers. Imagine a farmer in a developing country who has been using the Pi Network app on her smartphone. Through the integration with Chainlink, she could access new financial tools. For example, a smart contract for crop insurance could be built on the Pi Network. This contract could use a Chainlink oracle to access reliable weather data for her region. If a drought occurs, as verified by the Chainlink network, the smart contract would automatically pay out an insurance claim in Pi directly to her digital wallet. This happens without a claims adjuster, without paperwork, without the possibility of corruption, providing a financial safety net that was never before available to her. For those of us in developed countries, the benefits would center on efficiency.